94.3.
This is Good Morning Mumbai with HrishiKay.
Radio One.
Thrilling Thursday edition of Talking Finance with Saurabh Mittal, my finance expert. We're actually going through some salient features of the budget which didn't come to light in the first week, but gradually has gone in and dissected them. Vacations becoming a little more expensive if you're thinking of taking foreign vacations. Individuals, whether they can switch back to the old tax regime once you choose the new one. And of course, yesterday he was talking about a small relief for startups. Hi, good morning. How are you?
Good morning, Rishi.
The internet, in particular social media sites, have been groaning with the weight of the abolishment of the Dividend Distribution Tax.
Right.
I want you to talk about it and also give us this impact.
Right. So, abolishment of dividend distribution tax is something which has directly and very highly impacted an individual investor. So, let me just give you a brief background. Dividend distribution tax, or as it is known as DDT, was introduced in the year 1997 by then Finance Minister P. Chidambaram. I think the core intention was to put the tax liability in the hands of company so that the income so received from dividends is tax-free in the hands of investors. It is also widely speculated that during 1997, internet banking wasn't there, so physical checks had to be sent to the investors, which had two wide-held problems. One being logistics, that check would not reach the customers, they would get lost or torn out during the transit. And secondly, investors at time didn't report them in income tax returns at that point in time. Now 2020 is quite different. It's a quite different game now because dividends can instantly be distributed to all the investors and can be cross-matched in their tax returns too.
So if DDT is abolished, what is the confusion on the TDS on dividend income? Because everybody is saying, oh, the onus has come on me. What am I going to do?
Right. So actually the tax dividend is now taxable in the hand of the investor. But while we see removal of DDT at one end, there is another 10% TDS to be applicable on dividends in excess of 5,000 rupees. But this is in case where the dividends are paid by the mutual funds. There are two options available in case of dividends in a mutual fund. One is a dividend payout, where the money is directly credited to the bank account of the investor. And second is dividend reinvestment, where the money is automatically reinvested back into the mutual fund scheme. Our listeners should note that dividends actually paid in the dividend payout option will be subject to TDS if the amount is above rupees 5,000 in a financial year. And TDS will not be attracted on dividends paid to investors who are holding the shares directly in their demat account or through a portfolio management services.
Okay, so that's the caveat.
Yeah.
What's your recommendation?
So, according to us, dividend option in a mutual fund was anyways an unattractive proposition till now for investors who wanted to seek a regular income. The point to understand here is that once a mutual fund declares a dividend, then its net asset value or the NAV falls to that extent. Systematic withdrawal plans or SWP should be considered at such a time, which will result in selling those particular units of mutual fund which are required to match the cash flows, and there will be no TDS on it. It will be constructed as a capital gain.
Well, construed as a capital gain.
Yeah.
Okay, your quotable quote for the day, Saurabh?
So it's a great quote from Robert Arnott. He says, in investing, what is comfortable is rarely profitable.
True that.
Yeah.
If you want to invest, where can we reach out to you?
So you can put a mail to me. My email address is saurabh@cwa.co.in.